Today, we're diving into the heart of crypto volatility by looking at one project in particular, Dego Finance. We're going to break down what happens when a token's price doesn't just dip, it goes into an absolute freefall.
Just look at this number, almost 50%. Imagine you open up your portfolio and poof, nearly half your investment is just gone. That's exactly what happened to people holding the Dego token.
And this wasn't some slow-motion train wreck happening over weeks. No, as one source put it, this was a catastrophic collapse in just 60 minutes, 1 hour. That speed is what makes this so fascinating and honestly pretty terrifying.
So let's really get into it. We're going to rewind the tape on this single hour of absolute chaos to see what kind of forces can throw a market around so violently. Okay, here are the hard numbers. On June 4th, Dego Finance went from $2.63 all the way down to $1.33. That's almost half its value wiped out in the time it takes to watch an episode of your favorite show. So what is Dego Finance anyway? I mean, how does a project with a seemingly solid idea and a real vision just fall off a cliff like that? Let's pop the hood and take a look. At its heart, Dego Finance wants to be a launchpad for new ideas in Web3. And they use this great analogy of Lego bricks. The idea is that they create these financial tools that other developers can just snap together to build new applications, kind of like building with Legos, but for decentralized finance. And this wasn't just a concept on a white paper. They actually built out a whole ecosystem. You can see they had tools for launching new projects, an AI tool for making NFTs, a way to make those NFTs actually earn your money, the whole 9 yards. On paper, it's a really ambitious setup.
All right, so keeping that ambitious vision in mind, let's get back to the crash. What on earth could be powerful enough to yank a project like this down so hard?
That really is the million-dollar question, isn't it? What kind of perfect storm of events has to happen to trigger that kind of violent reaction in the market? Well, you can think of it like a battlefield, a constant tug of war. On one side, you have the forces trying to pump the price, positive news, community hype, and that powerful fear of missing out, or FOMO. But on the other side, you have the dump forces, huge holders, or whales, selling off, order books so thin that there aren't enough buyers, which just leads to a spiral of panic selling.
And to see just how intense this battle was, get this. At one point, Dego's trading volume exploded by more than 1,700% in just 24 hours. A spike like that is pure speculation, and it's basically like pouring jet fuel on a fire. It makes every single move, up or down, way bigger.
But some analysts argue it's not just market psychology. There might be a deeper game at play. This quote suggests that for the average person, the system itself is designed to work against you, with exchanges set up to profit from all this wild volatility and those massive price swings. And this is where things get really confusing for a regular trader. You're basically caught in the middle of a war of predictions, trying to figure out what's real and what's just noise. I mean, on one hand, you have the raw data, the technical charts, and they are practically screaming at you. Look at this. It doesn't matter if it's the RSI, the moving averages, you name it. Everything is flashing sell or even strong sell. It's just a wall of red flags.
And that data lines up perfectly with how people were feeling. The Fear and Greed Index was at a 10, which is officially extreme fear. So, the vibe in the market was not good.
But, and this is a huge but, at the exact same time all this fear and bearish data is swirling around, the project itself is talking a huge game. They're positioning themselves as building the literal foundation for a whole new decentralized world. The difference between the data and the dream is jarring. So you end up with two completely different futures. The bull case says, A, look at this cool Lego brick idea, this could be huge in the long run. But the bear case? Well, one predictive model that just crunches the numbers says the token could lose 98% of its value by 2050. How is anyone supposed to navigate that? And if all that wasn't enough to give you whiplash, there's this. Binance, one of the biggest exchanges in the world, literally slapped a monitoring tag on Dego. That's a massive red flag. It basically means the token is on probation and could get kicked off the exchange entirely, which would be devastating. So what's the takeaway here? Let's zoom out from just Dego and think about what this tells us about this part of the crypto market, what a lot of people still call the Wild West. It really boils down to a few key risks. You've got low liquidity, where there just aren't enough buyers and sellers, so tiny trades can cause huge swings. You've got a lack of regulation, which can open the door for all sorts of manipulation. And then there's just straight up
viability risk, the uncomfortable truth that a lot of these projects might not actually make it in the long run.
So, how do you even play in a sandbox this chaotic? Well, it's not about being a fortune teller. It's all about managing your risk. The sources all point to a pretty clear game plan. First, do your own homework. Don't just chase hype. Second, diversify so one bad bet can't wipe you out. Third, really understand that FOMO feeling so it doesn't control you. Fourth, use tools like stop losses. And finally, the golden rule, you've heard it a million times, but it's true. Only invest what you are genuinely okay with losing. Which brings us to our final thought. After seeing a project crash like this, surrounded by a hurricane of conflicting signals and real risks, you kind of have to wonder, in this corner of the crypto world, is this insane volatility a flaw, a bug in the system, or is it the whole point?